Paramount stock is down over 33% year to date. Over the last 5 years, the stock is down more than 80%. This is an amazing company that owns a lot of IP, a lot of franchises, and a lot of movies and series that you're most likely familiar with. 80% over the last 5 years. And the thing is, I have a long history with Paramount and Warner Brothers Discovery. I used to own Paramount back when it was Viacom CBS, before they did the whole thing about changing the name. I used to own Viacom CBS. Then I sold it and I bought Discovery before the merger. Then I lost money around 27% on WBD in 2022. And I sold it, and I never really got into the media stocks again, never touched them again. And now I'm reviewing Paramount after this long time, and I'm just surprised. I mean, I'm seeing a lot of improvements recently, and the stock keeps going down. I mean, more than 33% year to date. It's just insane. So in this video, I'm gonna try to tell you my opinion on Paramount, if I believe this is an amazing buying opportunity, if this is a good risk-reward setup, or it's maybe just a value trap that deserves to go down. It's very, very possible. But for Paramount, over the last earnings report, as you could say, if you look at the non-GAAP profitability, which is what I try to look for in terms of those kind of companies, because they have a lot of expenses, a lot of one-time stuff, a lot of adjustments they do. But in terms of non-GAAP profitability, it has improved. I'm seeing massive improvements with Paramount. The core, the legacy business, which is the TV channels and all these kind of things, is still very profitable. It's still a cash-generating machine. And the profitability increased 11%. Pretty amazing. Meanwhile, the growing part of Paramount, which is Paramount Plus, is still losing money, but profitability has improved. It has improved over 44%. I mean, they're not profitable, they're still losing money, but they're losing 44% less than they did last year. And this is, of course, a good improvement. And they're actually doing it while still gaining subscribers. They gained around 3.7 million subscribers in the quarter. So they're gaining subscribers while actually getting closer to profitability. This is very important because most companies, they have to cut back on marketing and a lot of things to turn profitable. But this company is improving losses while also aggressively growing, Paramount Plus users. Pretty amazing stuff. I mean, I'm very impressed. You wouldn't expect that stuff. If you're looking at the stock, you would say this stock is just trash. I mean, it's declining in earnings. Nothing is going for it. But there's actually a lot of improvements with Paramount. And if you look at something that could potentially happen, I read that stuff, and that Paramount Plus, might be combined with Comcast Peacock, and they might be, combined within one service. I'm not sure if this is going to happen, but it's, it's pretty possible. But if you look at Paramount itself, in terms of book value. Now, I tend to use tangible book value with most companies, but you can't really do that with Paramount because Paramount has a lot of intangible assets, a lot of brand names that's worth a lot of money. And, it's not my favorite because I like tangible assets. I like to know exactly what they could be sold for whenever I'm buying a company with a high debt. Something like MPW, I could tell the assets how much approximately they're worth, tangible assets. But intangible, and it's very hard to determine a specific price. But in terms of price to book value per share, it's trading at 30 cents on the dollar. I mean, 30 cents, really? I mean, even if the intangibles and the goodwills were inflated, still, 0.30, it's insane for a company like Paramount with such franchises and for such things that they have. But one of the reasons why it's trading at such a low level is because the company does have a lot of debt, of course. It has $14.6 billion in long-term debt. Then they have other obligations, $1.3 billion in something participant royalty payable, and then something about deferred income, and something about other liabilities. In total, it's something like $17, $18 billion. I would say around 17 to 18 billion. So this is a lot of debt for a company that has a market cap of, I believe the market cap is like $7 billion. So this is a lot of debt. This is a lot of debt for a company like Paramount, a lot of debt. And this is one of the reasons why the stock is going down. But again, if you look at the other side of the story, in terms of maturities, it's not too bad. They have 125 million in 2025, 345 in 2026, and then another 86 million, but no major maturities before 2030. So all these maturities, 400 to 500 million. It's not the best for Paramount, but it's still pretty manageable. The company has $2.3 billion of debt. So they have enough, $2.3 billion of cash. So they have enough cash for them to be able to pay the short-term obligations for the next few years that they have. And their free cash flow is improving. And the analysts are expecting a massive improvement in free cash flow, as you saw in the previous few things that I showed you in terms of the slides. I mean, profitability is improving in the core business, and it's also starting to improve in the business that's losing money, which is Paramount Plus, and it's likely going to turn profitable or break even by next year. And this is pretty amazing for the free cash flow. As they're reducing CapEx, free cash flow is going to increase, 323 million for 2024. I'm not sure if these numbers will be accurate, but 600 million in 2025 and 959 in 2026. And I don't believe this is out of the normal. I don't believe this is, way out of reach, because the company used to generate $1.9 billion of free cash flow in 2020 and then 877 in 2019. So 300 and 500 million or 600 million, I don't believe this is unachievable. I think it's pretty achievable for a company like Paramount. So you're having an inflection point in free cash flow. You have a company that, yes, it has a lot of debt and it looks scary relative to the market cap, but the maturities aren't too crazy in the short term. And the cash and cash, they have 2.3 billion. This is enough cash for them to, pay their short-term debt and do a lot of the things that they have. And it's still profitable. The free cash flow yield is 4% on the expectation of 323 million, 4%. The dividend, which I wish it went to zero, but they didn't take it to zero, it's a 2%. So this is like a 50% payout ratio. They'd be left with half the free cash flow, which is like 150 million for 2024, which is not the best on maturities, but it's still enough with the cash position until free cash flow goes up again and things start to get into the right direction. So this is pretty amazing stuff. Looking at Paramount, I don't see the fundamentals looking as bad as the chart of Paramount is actually looking. It still says Viacom CBS, but it's Paramount. I'm not seeing it as bad as it is. I expected worse stuff. I haven't checked the stock in years, but it's not as bad as it looks. But the market hates uncertainty. And there's a lot of uncertainty with Paramount, if it's going to get acquired or not. They recently got a deal from Skydance, a lot of you heard of it, and they rejected it. They do not want this deal. And they have many different offers, and we don't know what's going to happen. Is it going to be acquired for a fair price? Is it going to be a lowball kind of price? As I told you, the market cap is $7 billion. Enterprise value, which includes debt, is $20 billion. This is one of the offers they got from Apollo Global Management. For example, they got $11 billion to acquire Paramount Pictures and Paramount TV Studios. And the Paramount TV Studios, Paramount Picture, for $11 billion, it's of course much higher than $7 billion. But then you still have the enterprise, which includes debt, around $21 billion. But $11 billion is really not bad for Paramount Pictures and Paramount TV, which actually excludes CBS, and it excludes Paramount's global cable network like BET, Comedy Central, Nickelodeon, MTV, other streaming businesses, and also Paramount Plus and Pluto TV. So $11 billion excluding all that stuff. So including all that stuff, I would expect much more than $11 billion. But again, we don't really know what's going to happen. We don't know if Paramount is going to be sold and for how much it's going to be sold. But I would expect for it to be sold a little bit higher than what it's trading at right now. So for me, the way I look at Paramount, I see a stock that's at an inflection point. I see a turnaround in the business. It's happening. It's going to take some time, some patience, but I see it happening. And I see the potential of it getting acquired. It's likely going to be higher than this price. That's what I would assume. Most acquisitions happen higher than the total value of the company. So I'm not really seeing why the stock is going down so much. There's just so much uncertainty. The market hates uncertainty, but I don't personally believe this is justified. Now, having said that, I'm personally not buying Paramount. Even though I said all these amazing things, I'm personally not buying it because I've been finding a little bit better risk-reward opportunities. I don't really want to touch the media stocks, even though I see so much upside with stocks like WBD, stocks like Paramount. But, I just have a rule in my portfolio where after I lose money with a stock, I don't go back to it again. It's a little bit weird, but that's what I do. Because let's say I lost money, I might have some bad emotions around it. I want to take revenge, buy more to make my money back. And then I'm not thinking from my head. I'm thinking from my own emotions. So if I lost money, which I did lose money with Viacom CBS, and I lost money with WBD, I just don't want to go back in. But to me, it looks like a pretty good opportunity. And you need a lot of patience, a lot of high risk tolerance for that stuff. But this is just my opinion on Paramount. If I missed anything, let me know in the comments. Not financial advice. Thank you again for watching. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.